So in today's video, people, I'm going to be talking about 5 reasons why I'm treating YouTube like the crypto market. So yeah, people, let's get into today's video. Now, the reason I wanted to actually talk about this today is because I've been doing YouTube now properly for about a month and a half. You guys know the prior story. I've tried to do it twice in the past before, but this is the first time that I've actually been, consistent with making videos, editing videos, and releasing them. And while I've been doing that, it's kind of showed me that, YouTube is very similar to the crypto market in the way that you have to treat it. Things do take time. You do have to buy equipment, which, equals to investing in yourself. And, it's something that you really have to keep on, being consistent at every day. So yeah, people, as I said, I'm going to get into the 5 reasons on how I'm treating YouTube like the crypto market. So let's get into these 5 reasons now. So the first point I want to get into, people, on this video is knowing that short-term volatility does not, decide the final outcome of my YouTube channel or my crypto investments. If you look into crypto, in the short term, sometimes it can look, very, very bad. When you're going through a bear market, when you might have some news that crashes the market. And as I said, in the short term, that might be very, very bad. And it's very similar to YouTube, where in the sense of with crypto, if you look at it long term, it's something that will give you a lot of hope, that you're going to be successful over the long run. Just the same as YouTube, one bad video does not mean that my channel is bad and that I'm failing. Also, on the other hand, one good video does not mean, I'm gonna go viral and become a millionaire tomorrow. So that's something that I've drawn very, very similar parallels in the way that I conduct myself on YouTube and how I treat it. It's something that I'm treating as a long-term investment. Especially in the past, it's something that I've tried to kind of look at like a get-rich kind of scheme, all those years ago. And, I've matured a lot since then, and I know that, it's going to take time for me to get where I want to be. And that's something that I'm fine with. As I said, it's very parallel to my crypto investments. You guys always hear me talk about long-term investing, my long-term holds. So, yeah, just knowing that, one bad period that you have, whether that be in crypto or in YouTube, does not decide the final outcome on whether you're going to be successful or not. And another thing I've noticed as well, this is the kind of period where most people would quit. In the beginning, in the first 2 to 3 weeks, you're excited. You've started your YouTube channel, you started making videos. Your first few videos might do quite well. And there's always that dip that happens once you kind of, release your first videos, especially for a small creator like myself or other small creators. You might get that first little push and then things start to go down. And as I said, that's the same thing as the crypto market. You're going to go through times of being in a bull run, in a bear market, or just, going sideways and consolidating. And as I said, this is the time for you not to quit. This is the time for you to double down and, go even harder and invest in yourself even more. So, yeah, that's the first point, people. Now, people, let's get on to my favorite point of the video, which is point number 2, and which is consistency is my version of dollar cost averaging. Now, if you know anything about the financial markets, crypto to be specific, because that's what I talk about the most, there is something called dollar cost averaging, and that's where you buy a particular asset at different prices. This could be once a week, this could be every day, or this could be once a month. And while you're buying it at different prices, you're allowing yourself to get, you're not using all your money at once, and you're allowing yourself to get the best price over the long run. And this works well for people who are long-term investors and who are not just trying to, buy hype coins or get rich overnight. So, yeah, my version of this in YouTube is being able to upload videos consistently In the beginning, I was doing one a day. I think now it's gone down to about one every other day. And you know, that's still fine. I'm still happy with that level of consistency, because in the beginning, you know, I found it hard to even speak to the camera, to even make a video like this sitting down in the car. It probably would have taken me about a day or two to make it, and now I can, you know, do these videos fairly quickly. So yeah, I see myself uploading videos daily or every other day as my dollar cost averaging, but in the sense of YouTube. And these videos are like small deposits into my YouTube account, and hopefully, you know, in the next 12 to 18, 24 months, you know, I'm able to see myself hopefully monetized on the platform, having also built a business off the back of the platform as well. So I'm not trying to, you know, rely on a viral moment. This is not what this channel is being built on and is about. Even if I can, you know, have a small community of people who are, you know, into investments, doesn't have to be crypto, can be stocks, can be bonds, anything, can be property, people who are into saving, anything, you know, financial that is trying to, you know, push you forward. People who have different 9 to 5s. That's the kind of community that I'm trying to build on this channel. So yeah, that's definitely not built off a viral moment, and it's something that is built over time. And I have to, you know, show my consistency myself in order to get people to be consistent with me. So yeah, that's point number 2. Just being able to upload videos all the time, whether that's daily or every other day, and use that as my dollar cost averaging for YouTube. Now, let me get on to point number 3 on how I'm treating YouTube like the crypto market. And the next point I want to talk about is, you know, the compounding effect, which leads back into the point that I just previously spoke about, which is point number 2, and having that consistency to, you know, upload all the time. With this point, you know, with crypto and, you know, within YouTube, you get rewarded for, you know, having that compounding effect of always putting in work. You know, if you stay in both of them in the long run, it's something that, you know, really rewards you for being consistent. You know, and I always speak about having one subscriber can lead to having thousands down the line if you stay consistent to that one subscriber. You know, having one idea on YouTube can turn into a whole series, you know, down the line. You know, it's something that all stacks up if you keep on putting in that work and if you stay consistent. You know, in the beginning, it doesn't always feel worth it when I'm sometimes putting out videos and, you know, they're not getting the views that you expect. But there's something that a mentor of mine taught me recently, is that YouTube now is not always about getting the most views. Of course, getting views is amazing, because in the long run it's gonna help build a channel, but you have to think of YouTube as a business as well. And if you're able to get, you know, laser focus clients that actually want to come to you, it's not always about views. You can play the game of, you know, getting a lot of views and building your channel that way and going on a monetization route, or you can, you know, stay within your niche, have a smaller crowd, but you're able to build a business off the back of that, and you're also able to help people as well off the back of that. So yeah, I'm just betting on the compounding effect, and this works the same way as in you know, the financial markets, investing. If you just compound over the years, that £1,000 that you might invest into, you know, stocks or crypto in 2026, imagine what it can grow to by, you know, 2030 or 2031 if you just keep on doing the same work, getting better, being consistent, showing up for yourself, and, you know, doing what you say that you're going to do. That's a big one, and that's something that I've had to come to terms with, especially with this YouTube channel. When I'm tired after work, if I'm with my kids and I'm, you know, tired, you don't want to do the video, you have to make yourself do the video. Like right here, I'm here today on a Sunday. I've come to pick up my family. They're just doing some shopping quickly. And, You know, I just made sure that the camera was on me. All these small things, having the camera on me, you know, just being able to make a video anywhere, just hook it up to the car and just, you know, get it done. So yeah, that's what I really want to touch on in point number 3. Now let's get into point number 4. Hopefully my camera doesn't die on me. It's on the red battery at the moment. Just got the last 2 to get through. And this is a very important one. And what being in the financial markets has taught me is to not let emotion ruin my strategy. In crypto, in stocks, in any financial market, if you allow your emotion to take over, it's going to deter you from your strategy. It could make you lose even more money than, you know, if you were in a bad position and you were losing money. Being more emotional could make you even lose more, because you might try to put more in, and then in the long run, you get scared and then sell it off, and then you've lost more anyway. If you've got a plan to hold a certain asset for a certain amount of time and it dips a bit, or there might be some bad news that comes out and you might be down 10, 20, 30%, knowing that you're sticking to your strategy and staying the long run and not letting the emotion, not letting the noise on social media take you away from what you need to do. This is something that has definitely taught me, and that what I'm using in my YouTube channel, you know, getting low views, getting comments that might not be the most nice comments on your videos. Releasing videos and only getting 2 comments, and one of them are, you know, nice, or one of them might be a bot in the beginning. And just not allowing that emotion to steer me away from what I'm trying to do on this channel and what I'm trying to build has probably been the biggest lesson. And it's definitely something that's helped me a lot, because, you know, although I am a small channel, I do get comments as well, and some comments I have got haven't been the nicest, as I said, and I just reply back and just say thank you for like all the engagement. I don't mind, and it's made me grow that thick skin. So just not letting emotion within crypto or within YouTube take over with what I've got to do. Just get the job done and get it done to my, you know, best of ability is something that's gonna push me forward. You know, I always say to myself, you know, from people that I see who are winning, it's normally the most disciplined person that wins, not the most emotional. Now, don't get me wrong, emotions are good and they have their place, but from people that I've studied and I've watched and I've come across and I've, you know, been being able to interact with, you know, they're always very, very, very disciplined and they get the job done no matter what. So yeah, that's another thing of how I'm treating YouTube, like the crypto market. Now, people, let's get into the 5th and final point. And the last point I want to touch on is being able to treat YouTube like almost like a 9-to-5 job, just the same way how I treat crypto. And let me explain a bit. With crypto and with the financial markets, I always try and treat it like it's something that is part of me. I don't go 2 or 3 days without, you know, checking the markets and checking what's going on, checking my accounts, networking with people, video ideas, just treating it like it's a 9-to-5. Every day I need to do something to do with YouTube or to do with my investments. Even if I'm not making a video, I have to be either crafting a video or editing one or thinking where my next video is going to be made. So that's also a piece of advice to anyone who wants to do YouTube, is to treat it literally like it's one of your job. And now people might say this is the wrong way to go about it, because, you know, it might cause burnout or you might start to get bored. But the way I'm wired, I have to do it this way in order for me to keep on doing the thing that I want to do, which is, you know, YouTube, and which is to invest and to become more financially stable over the long run. And I have to do it this way because I'm wired in a way where if I go, you know, 2 or 3 days without doing something, it becomes a habit. But if I go 2 or 3 days with doing something, I get into those good habits. Even when it comes to the gym, that's where I've just come from now as well. If I have you know, like a week off, then that week might turn to 2 weeks. So yeah, I'm just trying to just treat this YouTube like a second job, like I'm doing overtime. Even when I don't want to do it, I still have to turn up. I still have to get the job done. The video might not be the best, but it's about getting the content out there and helping people and building the brand. So yeah, that is my fifth and final point, people. I just wanted to make a quick video because it's something that, you know, has been on my mind recently. So just wanted to get that one out there. But yeah, people, I'm going to end the video here. I hope it was of some use to you and of some sort of, you know, insight into how I'm thinking about YouTube and crypto as well. And I'll see you guys on the next video.